And in our top business story, business activity growth in the UAE's non-oil private sector fell to a 4-month low in September as gains in new orders slowed despite increasing output, according to a new survey. The HSBC UAE Purchasing Managers Index, which measures the performance of the manufacturing and services sectors, dropped to 57.6 points in September from a record high of 58.4 points in August. The adjusted index remains well above the 50-point mark, which separates growth from contraction, according to the survey of 400 private sector firms. UAE firms saw output growth accelerate to a 3-month high of 63.2 points in September from 62.2 points in August. However, new orders growth dropped to 64 points, the lowest rate since August 2013 from 66.4 points the previous month. Growth in new export orders also slowed to a 4-month low of 60.9 points from 64 points, which was the highest level since the series began in August 2009. Employment creation across the UAE's non-oil private sector slipped to 52.6 points, the weakest growth since January. Output price growth slipped into negative territory again after 1 month in positive territory. The rate of input price inflation eased to a 4-month low of 54.4 points. The International Monetary Fund yesterday lowered its economic growth forecast for most Arab countries, although it said growth in oil-rich Gulf nations will remain strong. In its semi-annual World Economic Outlook, the IMF said the Middle East and North African region would grow by 2.6% this year, compared with 3.2% forecast in April. Growth in the six-nation GCC states is projected to remain strong at an average of 4.5% in 2014 and 15. The IMF increased its economic growth projections for Qatar, Saudi Arabia and the UAE, but lowered those for Kuwait, warning of oil price fluctuations due to weaker demand and increased non-OPEC production, particularly from the United States. Globally, the IMF cut its economic growth forecast for the 3rd time this year, warning of weaker growth in core Eurozone countries, Japan and big emerging markets like Brazil. The IMF has now cut its current year growth forecasts 9 out of 12 times in the last 3 years, as it consistently overestimated how quickly richer countries would be able to pull free from high debt and unemployment in the wake of the global financial crisis in 2007-09. Air cargo growth between the Middle East and Europe, the region's largest air trade partner, is expected to average 4% a year over the next 20 years, according to Boeing's latest World Air Cargo forecast. Global air freight growth until 2033 is meanwhile forecast to average 4.7% a year. Cargo traffic in 2033 is expected to more than double to 521.8 billion revenue ton kilometers, which is a key industry measure from 207.8 billion revenue tons kilometers in 2013. The growth between the Middle East and Europe averaged 5.4% a year between 2003 and 2013, representing 36.4% of the region's international air cargo market last year. The report, however, warned that direct flights connecting production centers in Asia and Europe pose some risk to air cargo traffic between the Middle East and Europe. The U.S. aircraft makers said that the region will emerge as a cargo hub, which will be supported by government spending on associated infrastructure. Cargo volumes at Abu Dhabi International Airport were up 16% year-on-year in the first 6 months of this year, with 377,885 tons handled during the period. Middle East airlines outperformed every other region except Latin America in terms of cargo growth in August, according to data provided by the International Air Transport Association. The region's carriers posted cargo growth of 7.8%, while capacity increased by 6%. Abu Dhabi will face a shortage of residential units in near term as population grows, leading to increase in rents, according to a new report by real estate consultancy firm JLL. The firm stated that it expects a future housing shortage as near-term supply deliveries are below historic averages at a time of strong demand, and additionally predicts further rental increases over the short term. Rents for prime residential units have remained stable at 150,000 dirhams per annum in the 3rd quarter, while sales prices for apartments and villas rose by 6% to 16,000 dirhams per square meter. The Abu Dhabi Executive Council abolished the annual extension of a 5% cap on rent increases in the city in November 2013. However, Cluttons, a real estate consultancy, said in September rent rise in Abu Dhabi is set to slow down in the coming months. Tenants' relocation has had an impact on the rental market, with rents rising by 0.9% in the second quarter, down from 1.9% in the first quarter of 2014, with Cluttons adding that rent prices have risen by only 1.2% on average across the city's freehold areas. The Abu Dhabi municipality has also tightened rules on sharing of houses and has started a campaign that says no to mass accommodation. In its latest report, JLL estimates nearly 1,200 units were added to the residential stock during the third quarter, which included handover of new houses to Emirati families through the Al Falah scheme. These new deliveries now bring the total residential stock to nearly 242,000 units at the end of Q3 2014.